China's zero COVID policy has European companies there bracing for losses and reconsidering their investments. That's according to a new survey from the European Chamber of Commerce. More than a quarter of the 370 firms participating in the survey said they're thinking about pausing investments or moving them to other markets. Now, that's double the number from 2 months ago. Almost 60% of those questioned projected lower revenues for the year. Beijing's zero COVID policy has resulted in lockdowns in the manufacturing hub of Shenzhen, as well as the world's largest port, Shanghai. It's not just Beijing's COVID policy that's causing problems for the Chinese economy. DW Business's China analyst Clifford Coonan takes a look at the challenges facing the world's second biggest economy.
Supply chains are struggling to keep product moving. Retail sales are falling, restaurants and catering are suffering, industrial production is slowing, unemployment is on the rise. Almost every metric suggests Beijing's official forecast of 5.5% growth this year is too optimistic. Some analysts reckon that China will grow below 5% in 2022, a rate not seen since the fallout from the Tiananmen Square massacre in 1989. Xi Jinping is expected to seal an unprecedented third term as leader this fall, but his power push comes against a background of three major challenges to the economy. China's property market has been in crisis since last summer. That's when the financial troubles of China Evergrande Group sparked a sell-off in the giant property company's bonds and other developers. Property developments accounts for around a quarter of China's economy. And China's top 100 developers' monthly contracted sales volume fell for the 8th straight month in February, plunging almost by half compared to a year earlier. Since the beginning of 2021, around a dozen Chinese developers have defaulted on around $14 billion worth of offshore and domestic bonds. The government is trying to shore up the damage, but the emphasis on housing for living rather than speculation means the heady days of massive growth are likely over. China's choice to stand with Russia over its invasion of Ukraine is putting serious strain on globalization. The US warns that Beijing's stance could result in secondary sanctions on Chinese firms. That could cause further problems for the tech sector, which is heavily reliant on Western components. The most significant acute problem is the zero COVID issue. My colleague Zhou Zhong Han in Taipei has this for us.
Thanks, Clifford. 45 Chinese cities are currently closed, affecting 375 million people, or about a quarter of China's population. For the global economy, the supply chain will be particularly hard hit by the lockdowns. If we look at Shanghai, it has been closed for more than a month, although the number of cases has dropped significantly. The Chinese economy is primarily centered in big cities like Shanghai, and about half of Apple's supplies are located near Shanghai, Shenzhen, or Kunshan. Two Chinese PMI indexes have been below 50 for 2 consecutive months, indicating that the economy is in decline. Chinese President Xi Jinping is now facing a dilemma. On the one hand, he wants to ensure stable economic growth, which is crucial for his unanimous re-election this fall. But on the other hand, his insistence on zero COVID policy is a key factor that stifles economic growth, which no one dares to openly oppose.
Thanks, Zhou Zhong Han in Taipei, for that. As we can see, three major challenges facing the world's second largest economy.
Three major challenges. Well, 45 Chinese cities are currently under lockdown. That's what we just heard from Zhou. Among them, the world's largest port, Shanghai. Earlier today, I had a chance to speak with Jörg Wuttke. He's president of the EU Chamber of Commerce in China. I asked him if there were signs that Beijing was ready to turn away from its controversial lockdown policy.
There's unfortunately no sign, and again, maybe the pain has to get deeper in order for them to change the toolbox of zero tolerance. I mean, today we had the PMI coming out for services. Caixin is covering primarily the eastern coast as well as the private Chinese enterprises in the service sector, and it was a dismal 36.2%. So our survey and this kind of feedback indicates the economic damage is quite severe. There has to be a change, and all the members are requesting a change, and we came up with recommendations how to do this.
Do you believe that companies really are prepared to move their production, their investment elsewhere if they don't see a change?
I don't see European companies actually moving out of China and moving them, say, to Bangkok or to KL. What we are trying to indicate is that our headquarters are putting additional investment into China on hold, meaning they're reconsidering if there has to be more of their products and production in China. And that doesn't mean it's moving out, it's just not moving in, and meaning it's relocating to other locations. But again, of course, that has a significant impact on employment as well as on high tech in China. So the danger for China is of missing the train.
And China has said that it expects to see 5.5% growth this year. Many analysts have looked at that and said that's not realistic. How do you see it?
5.5 is out the window. There's no way. I mean, we had a very good first quarter. 4.8%, possibly right. But again, all indications are that the economy, in particular, of course, in the Yangtze Delta, starting in the last week in March, has been in free fall. Traffic is down, transportation traffic down in Shanghai by 80%, across China 70%, and even a province that has no lockdown whatsoever, like Guangdong, is down by 15%. And that's not going to change. I mean, again, we are facing near lockdown conditions here in Beijing. That's, of course, a more service-oriented economy, not really strong in manufacturing. But how is that all going to end? I think 4% at best is going to be achieved. And again, it's a long way to get there.
All right, we'll leave it at that. Jörg Fulke, he's president of the EU Chamber of Commerce in China. Thank you very much.
Thank you.